it comes to investing long-term, tiny numbers can quietly eat away at your returns. Today, we'll explore one of those numbers, the total expense ratio, and what it really means over time. In this animation, you'll see the total cost of investing in an ETF over a 40-year period. The starting point is simple: an initial investment of $10,000 left in the market for 4 decades. We're assuming a steady annual return of 7%, no inflation, no capital gains taxes, and no trading costs or other fees. Just one small percentage fee baked into the fund itself, the TER, which in this case is only 0.07%. That might sound insignificant. In fact, many investors overlook it entirely. After all, what's 0.07% in the grand scheme of things? But because this fee is deducted every year based on the portfolio's growing value, its compounding effect adds up. It's like a slow drip. Barely noticeable day to day, but over years and decades, it builds into something worth paying attention to. You'll notice the line steadily curves upward. That's not just your portfolio growing, that's the cost growing too, alongside your gains. The longer the investment stays in the market, the more pronounced the cost becomes. With a TER of 0.07%, the total cost over 40 years ends up at nearly 1/500. Still relatively low, but not nothing. This illustrates the value of keeping fees minimal, especially if you plan to invest for the long haul.